Hi everyone, my name is Piterpakulski. Today we'll continue building financial model of a street food chain. And today we have a very big story. We are going to build the cash flow statement. Cash flow statement is the most important part of your business idea. It shows you the breadth of your business idea. It is the table, chronological table where all the revenues and all expenses are gathered in timeline, and all the revenues and all the expenses occur at exactly time when you have to pay them, and you have to look at this table to avoid cash gaps. That's why it is very important, because you will be able to calculate the right amount of financing that you will need at this or that time inside the project life cycle. So today we will be building the cash flow statement. You can't build the cash flow statement, so the rule is very simple. You can't build the cash flow statement without building the revenues, expenses themselves. So first of all, the very big step before you build the cash flow statement, you have to build the revenues generating algorithms, expenses generating algorithms. So they are. So this is the first huge step where you will build the cash flow. And when it's done, you have to put these flows, inflows and outflows inside the timeline in the specific structure. So here cash flow begins. So let me just today we will be building it from scratch. It is 100% automized table, so you are not putting any inputs directly inside the cash flow statement. Everything was calculated before. If you find this video valuable, you may give us a like, subscribe, share this video with your friends. You can also order financial models from scratch for your unique business ideas. We can help you with that. And let's start. So first of all, let's create the timeline for the cash flow statement. This will be cash flow. So first of all, let's start with revenues. So what we are doing, so we are going from top of the model and search for green lines that we've already where we've already created the calculated the revenues. So here are the revenues inside the timeline. Here they are, and I'm just taking totals of these lines. So I'm just mapping these lines to the cash flow statement. These are the revenues. Then we move to direct expenses. The story is the same. we're going up to the top and just scrolling to the bottom, searching for direct expenses. So this is the first part of direct expenses. But this is not all of them. So we will, so these are the salaries. This will be another part of cash flow. So we're just scrolling down. Payroll, fixed expenses we can see here. Fixed expenses, finance, street food spot. So these are the investment plans. Investment plan consolidation, direct cost linked to the amount of spots. So this is the next part of direct expenses. Let me check if we have some other direct expenses. No, we don't have. So I'm just extrapolating this formula to the bottom. Then I'm creating total, expanding the formula. Then we move to payroll. So the payroll consists of two parts. The first part is payroll of the chain, and the second part of payroll is the payroll of the management company. So I'm going up, and I'm searching for the salaries, for the payroll. So this is the payroll inputs. These are payroll. This is the payroll of the chain. Then I'm going up again, searching for the payroll of management company. That was the payroll that I've just added. This is the management company payroll, so I'm taking these lines. Then I will extrapolate this formula to the right. Now I would like to group these lines, data, outline, group. The next block is fixed costs. the first one, the first part of fixed cost is fixed cost of chain, of spots that are inside the chain, and the second part will be fixed cost of the management company. So these are direct expenses, payroll, and fixed expenses. I also have fixed expenses of management company. I can go up, manage company payroll, management company fixed expenses. So I'm pulling this data from here. I'm adjusting formula. Then I'm going to extrapolate this story to the whole of our timeline. Let's group payroll. So we have revenues, direct costs, payroll, fixed expenses, then taxes, let's create a group of lines for inputs for the taxes. Then rate, so the first one will be revenue tax. Then we will have, for example, payroll tax. Then we'll have profit tax, and we'll have asset tax. Here will be the rates. So these are the inputs. I will mark them with blue. Blue is the specific color that goes with all our inputs. So for example, the revenue will be, tax will be 6% from the revenues. Payroll tax will be, for example, 8% from the salaries. Profit tax, let's say, will be 5% from profits, and asset tax, let it be, for example, let's say it will be $5,000 So I will put the names of taxes here. So revenue tax, I will calculate, we will take revenues and multiply on the tax rate. Payroll tax, we will take payroll and multiply on payroll. Tax rate. Then profit tax we will skip because we will need to add principal payments and interest payments. We will add profit tax at the end of the video. And asset tax we will pay if we have an operating activity. So operating activities, so we will write a formula. So if this plus this plus this plus this is more than zero, so if we do have revenues or expenses inside the operating activity stage, then we will place here this value. Otherwise zero. Now let's create totals for the taxes. Now let's create totals for the taxes and extrapolate these formulas to the right. As we can see, we started paying asset tax. Now we are moving to the first important value of your project, which is the result from operating activity. So this is the first important number that you need to know about your business idea. So it is revenue minus direct expenses minus payroll minus fixed costs minus taxes, and this is how your project breathes itself without external burden like loan payments, dividends, and so on. So this is the net breadth of your business idea. This is the first important value that you have to know monthly about business idea. So this is the first story. Then we are moving to investment activity. So investment. So we're going up as usual and start gathering the investment plan. So we have a plan of our chains, investment plan of the management company. So these are fixed costs, and here we have the investment plans for the chain. Here are the inputs. This means that somewhere near we will have some investment plans. So here they are. These are the investment plans for the chain. Then we also have the investment plan for the management company. Now we are extrapolating this formula to the right. And now we are moving to the second important value of your project. It is the result from investment activity. And this will be this value with an opposite sign, because investment in our case is the 100% outflow. So that's why we have minuses here.
So this is the result from investment activity. This line describes to you when and how much you need money during the investment stage of your business idea. So this is very important, the second very important part of your business idea. Then we are moving to financing activity of your business idea. And here we will place equity, or for example it's going to be your money, your business partner's money, your investor's money. Then we will place the loan when we get it. Here we will also place principal payments, and here we will place interest payments of the loan. We can create a separate lines for interest payments and equity, and principal payments and interest payments of the loan. You can also use put manually your financing, so I can create the inputs for this line, but later I will show you how you can also automate the creation of your business idea. Here we can see the loan payments affecting our cash flow, and then we are going to calculate the third important value of your project, is the result from financing activity. This will be your money, for example, your investor's money plus loan when you get it, minus principal payments minus interest payments. Then the next step, we need to calculate the profit tax. So let me write a formula for that. So if revenues minus this minus fixed costs minus revenue tax minus payroll tax minus asset tax minus principal payments and minus interest payments is more than 0, then we will take this will be the tax base, this will be the tax base,
and we will multiply this text base on the value of text. Well, here will be the profit text. I'm taking this percentage value, percentage rate, otherwise we put 0, then we close brackets, and now we are extrapolating this formula. The next step, we are creating two important lines. The first one is cash balance and the beginning of period, and the last line of cash flow will be cash balance at the end of the period. So during the first month we will have here 0, then cash balance at the end of the period, we take the result from operating activity plus the result from investment activity plus the result from financing activity plus cash balance at the beginning of the period. Then we go to the next month to the cash balance at the beginning of the period. We put here equals and put the value of cash balance at the end of the period of previous month. Here it is. And then for here we will just extrapolate the formula from the January. So this gives us operating, investment, financing activity plus cash balance from the end of the previous period. And now we will just extrapolate both cells to the right. So now we are done with our cash flow statement. I will just group the taxes, and during the next video we will be answering the first important question: how much money we need to start our project. So I hope you enjoyed this video. You may give us a like, subscribe, share this video with your friends. You can also order financial models from scratch for your unique business ideas. We can help you with that. So see you guys in next videos. Thank you.